Welcome to the Real Estate Way to Wealth and Freedom podcast with Jacob Ayers, providing actionable content to help you along your journey to financial freedom through real estate investing. As the premier asset class, real estate has helped ordinary people just like you amass fortunes. The benefits of passive income from real estate investing will allow you to live a life you want. And now your host, entrepreneur, real estate investor, and apartment deal syndicator, Jacob Ayers.
Hi, and welcome to the Real Estate Way to Wealth and Freedom podcast, episode 157. Hi, I'm your host, Jacob Ayers. Thanks so much for tuning in to this week's episode. I'm so glad you're here. Today, we have a special guest lined up, and that is Dmitriy Fomichenko. Dmitriy is the founder and president of Sense Financial Services, which is a boutique financial firm specializing in self-directed retirement accounts with checkbook control. Dmitriy began his career in financial planning and real estate investing in early 2000. He owns multiple investment properties in various states and is a licensed broker in California. Over the years, Dmitriy has taught hundreds of investment and financial planning seminars and has mentored thousands of investors. Today, we're going to be diving deep into a niche qualified retirement plan called the Solo 401k. So without further ado, let's bring Dmitriy on today's show. All right, today I welcome on the show Dmitriy Fomichenko. Dmitriy, hey, thanks so much for joining us.
Sure, Jacob. Thanks for having me on the show. Excited to be here.
It's our pleasure. Well, Dmitriy, for those people who don't know you, could you tell us a little bit about yourself and how you got started in the world of real estate investing and finance?
Sure, we'll be happy to. Well, first of all, as you and your listeners can say by my accent, which will stick with me till the end of my days, I'm immigrated in this beautiful country from Russia back in 1996. So it's just been 23 years for me. So I've been here a little over half of my life, and happy and excited to call America my home. But I got started in real estate back in about 2001. That's when I purchased my first property. About a year later, purchased second and leveraged those properties into buying multiples of more properties, and then got full-time kind of transition working in a real estate investment firm, and then transition into starting my own business.
Yeah. Okay. So you move over here when you were in your mid-20s and you start investing. And now I know you live in Southern California. Is that where you invest at?
That's where I started investing. I do not invest here now because numbers just don't make. Well, let me take it back. I do invest here, as far as I'm doing private lending. So I do have a number of private loans that's secured by California real estate. But as far as owning real estate, I do not own anything currently. I just sold the property about a year ago, which I more than doubled in value. So it's a good time to get out, I think, not to get in this
Yeah,
one.
Sure. Okay. Well, today we're not going to be focusing so much on your personal investments, so much as we are this qualified retirement plan called the Solo 401k. So tell us a little bit about what that is exactly.
Well, a Solo 401k is a qualified retirement plan, and it is a niche. And the niche is that it is designed for those people who are self-employed or own a small business. And that includes many real estate investors. Majority of my clients are real estate investors. It can be realtors or people who do in real estate part-time or full-time, whether it's flipping or wholesaling or even managing their own portfolios. And if you self-employed or own a business, and if you do not have any full-time employees working for you other than yourself and your spouse, then you qualify. And it's really, really powerful vehicle. Comparing to a self-directed IRA, it's much more powerful. And we can go over some of the details.
Yeah, sure. And just one quick question right off the bat, Dmitry, is for those people who are out there listening thinking, oh, I'm not self-employed, I have a day job still. Well, that doesn't necessarily preclude you from this solo 401k because you don't have to be a full-time self-employed business owner to be able to contribute to this 401k. Is that right?
You got it. You got it exactly correct. And in fact, the only thing that will preclude you from going this route or qualifying for a solo 401k is if you had a business with full-time employees. And IRS definition full-time is over 1,000 hours a year. So if you own a business and you have employees that are on the payroll working over 1,000 hours, then you will not qualify. But if you have, I have many clients who have full-time jobs and they do running a side business. In fact, this is for all those people that, like you said, who might be saying, well, this is not for me because I'm employed full-time, I don't have any business, or not self-employed. You got to think about this, because not only solo 401k is beneficial as far as what it can do for you, but just going in and starting your own business have number of other benefits. Because if you're working for somebody, if you have a job, then you got to think about it this way: you don't own that job. That job was given to you, and there is no guarantee you're going to have it tomorrow. So it's always good to have something else going on. So if you start some kind of a side business, not only you can qualify for a solo 401k, but also you create an additional income stream. And I remember attending a seminar many years ago, and it was, I don't remember the names, but two folks who wrote book called ABCs of Making Money, and they put a seminar. And one thing that I remember vividly from their presentation is multiple sources of income. And that kind of stuck with me, and I've been focusing on that personally. It's good to have multiple sources of income, because if you lose your job, you have maybe some investments going on that paying you passive income, or maybe you can have some side job, some side business or self-employment going on that you can rely on, and eventually you might develop that into full-time. From that perspective, working for yourself has many benefits. That's what I've been doing for the last 8 years, and I don't even have enough words to describe how good that is.
Yeah, sure. Well, yeah, this solo 401k is a pretty unique investment vehicle, and it's one that's not very well commonly known. Many people have heard of at least a basic 401k, which is qualified through your employer. The solo 401k is designed for people who don't have an employer but still want the opportunity to invest in a 401k. So kind of targeted and designed for that niche of people. Now, it just so happens that most real estate investors are actually self-employed to some extent in terms of their own investment properties. So that's where it's really applicable to most of our audience members listening in today.
I agree. It's designed with that particular group of people in mind. And many people probably have heard about SEP IRA. And there are some similarities, but there are also some differences which make solo 401k significantly more advantageous comparing to an IRA.
Yeah, and I'd like to dig into those, but really quickly, just kind of laying out the typical qualified retirement plans that are out there. Most people know the 401k, and then there's traditional and both Roth IRAs, and then there's this solo 401k that is. So can you kind of compare and contrast and talk about some of the similarities and some of the differences of the solo 401k?
Sure. Well, a traditional 401k, if you work for an employer who offers a retirement plan, then you might be offered that option to participate in your employer-sponsored 401k. Typically, it allows you to contribute up to $18,500 of your salary into this plan. Sometimes employer may offer matching, meaning that for every dollar that you put in, they might offer to put additional funds into that, which if you do have that, it will be foolish not to take advantage of it because it's free money. For example, if you're contributing, if they're matching 50 cents on a dollar, if you put in $6,000, they're giving you $3,000. That's 50% return immediate without you even investing. So, it will be just foolish not to take advantage of that. That's why I'm telling always my clients, if you do have that option, be sure to maximize your 401k contributions up to the match, and then you may consider other option. But so that's traditional 401k. On top of that, you individually can open an individual retirement account or an IRA, which allows contributions up to $5,500, and it can come either in a pre-tax, meaning your contributions are tax deductible and lowering your taxable income, or you can elect to contribute post-tax, which is ROT, known as a ROT. And comparing the two, obviously one is pre-tax, the other one is post-tax. But the beauty of the ROT is, while you're not getting any immediate tax benefits, all of your investments are growing tax-free, and the distributions will be tax-free. So think of it this way. Would you rather pay taxes on the seed or on the harvest? And I would rather pay taxes on the seed if possible. There's more to it than just this, but if you invest, ROT is especially beneficial for younger folks who have more years ahead of them to grow their investments tax-free. Think of it this way. If you started a Roth IRA, in your 20s or 30s, and you've got 20, 30 years to grow that. If you contributed, let's say, $50,000 into your Roth account over a period of 10 years, and that grown into $500,000 or maybe even $2 million, then all of the investments gains will be tax-free. So it is powerful. I think I personally also been looking into this for myself. And what I've been doing is I've been maximizing my Roth contributions, which, by the way, solo 401k has a Roth component allowing you to contribute post-tax, and the limit is up to $24,000 on a Roth contribution, so it's significantly more. So I've been contributing into Roth previously. Now, as my income grown, I'm looking for every possible way to minimize my taxable income. So I'm contributing pre-tax to get the tax benefit now. But at the same time, I do have a chunk of money in my Roth, which is growing tax-free. So I think using a combination of a pre-tax versus Roth can be very powerful.
Yeah, and that's something I'd like to dig into a little bit, not to sidetrack ourselves from the solo 401k, but when trying to determine whether to invest in a pre-tax or a post-tax qualified retirement account, one of the things you're saying is, as a younger person, maybe investing in that post-tax Roth IRA is the better choice because you've got a longer time for your earnings to grow tax-free. Now, another kind of filter I've heard people talk about is, do you think you'll be in a higher tax bracket or a lower tax bracket when you retire or when you're able to withdraw those funds? So is there any kind of validity to that filter in your opinion?
Well, there is. The only thing is that we don't know what
sure.
the tax bracket is going to be. Generally speaking, taxes are not going down. We recently got some tax breaks because of the recent changes in the legislation, but generally speaking, taxes are probably going to be higher. So Roth definitely does make sense, but again, because we don't know exactly what's going to be 20, 30 years from now, I think having a combination is good because you can basically you can have more freedom, more control, because there are certain years maybe you can take more of the tax-free income, and other years maybe the opposite. So I think having a combination is definitely powerful. I've seen people with larger amounts, like $500,000, those folks are closer to the retirement, and they just kind of bite the bullet and convert $500,000 into a Roth. I probably will not do that. I probably will not recommend that. I mean, maybe taking a portion does make sense, but converting all of that is not. Because speaking of real estate, I intend to continue to invest in real estate. And as you and I know, and as probably most of your listeners know, owning real estate comes with some good tax benefits. So you can still have income, and because you own real estate, you can minimize that income and minimize your taxes. So I personally don't want to have just tax-free income, period, from my Roth 401k, for example. I do want to have some taxable income, which then I can use some real estate to offset.
Yeah, sure. Well, that certainly makes sense. And that's a good point you bring up, Dmitry, is in my personal employer qualified 401k plan, I don't have the option to invest in single family homes in Oklahoma like I traditionally do. You know, I've got the ability to invest in small cap and mid cap and large cap US equities and things of that nature. So the availability, what you're able to invest in these traditional 401ks is very limited compared to what you're able to invest in solo 401ks.
Yes, yeah, I agree.
Yeah, so another thing that kind of jumps off the page when comparing and contrasting the solo 401k to the other qualified retirement plans are the contribution limits. They're much, much higher than the 401k and the IRAs. So can you talk about that?
Yeah, that's definitely one of the major advantages that solo 401k has. The contribution limit currently in the year 2018 is $55,000 per year.
$55,000 per year.
Yeah, this is 10 times higher than an IRA. As I mentioned earlier, IRA limit is $5,500. So this is $55,000. Now think of it this way. If you are and if you own a business, maybe a real estate agent, right? I have many clients who are real estate agents, or maybe you're a flipper. You buy, fix up, and resell properties,
Sure.
And you're making good income that way. Well, if that's your business model, and you also bring in your spouse, potentially together as a family, you can shelter over $110,000. And if you're over 50, that limit goes up additional $6,000 per person to $61,000. So giving you, again, ability to potentially shelter over $120,000 of your income from taxes. This is very significant. I mean, think about this way. If you're able to lower your taxable income by $100,000+, what's that gonna do to your bottom line? That's probably gonna drop you to a lower tax bracket, right? And you're going to pay significantly taxes on the significantly lower amount. So, the bottom line can be huge. So instead of paying this money to Uncle Sam, you can put that into your own retirement account. You can get a tax deduction. You can save on taxes. And on top of that, because this plan can be structured as a truly self-directed plan, you can invest in what you understand. You're not going to be confined just to the stock market, which most of us have no control over, and we're just here a few days after major correction or major decline in the market that many folks experienced. And if I don't know if any one of you had some kind of an insight that's going to happen and you liquidated everything. Most people did not have that. And so if you invest in real estate or do private lending or do other alternative investments, you can find something that you understand much better and you can control much better than the stock market, because the truth is we don't have any control over that. You can play maybe some games and use some strategies such as dollar cost averaging to minimize maybe the risk, but they're still there.
Yeah, certainly so. So in the solo 401k, you're able to invest in a much broader asset class range. So you can invest in equities, stocks, bonds like you typically can in the other qualified retirement plans. But in addition, you can also invest in alternative assets like real estate, oil and gas leases, art, if I'm not mistaken, or maybe art's not qualified. But could you go through some of those alternative asset classes that are able to invest in through your solo 401k?
Sure. And what you were talking about is most people, when you tell them, hey, you can actually use your IRA or 401k to invest in real estate, most people are shocked. They never knew that's possible. And the reason is because the conventional financial institutions and your brokerages and your stock broker or financial advisor, they basically condition you to think that way because that's how they make money off of you investing in the stock market. But if you look up the IRS code, you'll see that there is a lot more options for you to invest. In fact, IRS actually does not have a list of permitted investment options. IRS has a list of things that you're not allowed to do or not allowed to invest. And when it comes to investment options, the only investments that you cannot make with your retirement account, such as IRA or 401k, is collectibles. You mentioned artwork. That's actually something that you cannot invest in.
Okay, got it.
Any collectibles, anything that considered collectible, example again, an artwork or maybe stamps or coins, things like that. And also life insurance contracts. And in addition to that, you're not allowed to engage in any transaction using your retirement account with disqualified person. And disqualified person is yourself, your spouse, your parents, grandparents, your kids, grandkids, and their spouses. So if you think of it, this is a vertical line. Okay, so your ancestors and descendants are in that group. You can go sideways. Your sister or brother or uncle or nephew, niece, okay. So those individuals are okay. It's only immediate family members. For example, an example of a prohibited transaction will be you buying a rental property with your 401k and then renting that property to your daughter or to your parents. That will not be allowed because your retirement account now engage in a transaction because your lease is a transaction between two parties. That will not be allowed. So you're not allowed to engage in any transaction with disqualified person, and disqualified person is not allowed to provide any services or receive any benefits from your retirement account. So if your father is a handyman and you own a property, your father cannot work on that property. You have to hire somebody else who's not related. You're not allowed to do any work on the property yourself either because you are a disqualified person.
I see.
Regardless
Okay.
whether you get paid or not, you're not allowed to do it.
Yeah, sure. Yeah, that makes sense. So what are some of the pros and cons to investing in real estate through a solo 401k like this?
Well, the benefits investing in real estate, and not only real estate, I think the major advantage of the self-directed solo 401k that you're not just limited to real estate. You can invest in virtually anything, like I said, except those couple of items. There's limitless investment options. And when you're talking about real estate is a common investment because most people understand this and know about this. But again, when you're talking about real estate, there's many subsets of that. Yeah. Real estate can be a single family rental property. Real estate can be multifamily or a commercial property. Real estate can be a development. Real estate can be you actually, or your 401k being a bank. That's what I'm personally doing is I'm using my 401k as a bank. I'm a private lender, so I'm lending money to other people who own real estate and can get conventional mortgage, and there is a demand for those loans. And I'm getting double-digit returns without doing any work. It's completely passive. I don't have to deal with the tenants. And you can also invest in syndication deals or private placements. All of that is under a broad definition of real estate, but it can be many, many different things. I personally think that owning real estate is great for you personally. You personally using your own savings, buy real estate, because you're going to get some nice tax benefits, and you got benefit of potential appreciation and value. But for retirement accounts, again, depending on the deal, real estate might be great. I do own a couple of properties in my retirement account. Again, generally, I think it's better to do like private lending or invest in notes or note fund. But one deal I came across about 5 years ago, and it was a great deal. I didn't have any cash to do it personally, so I did it inside of my 401k because I had the money, and it came out to be a great deal. I had a nice cash flow on it. It doubled in value in 5 years. It's in Phoenix, Arizona. And then my other property, I actually end up owning involuntarily because it was a note. It was a loan that I made out to someone else, and they defaulted on the loan. They could not basically continue, and they agreed to deed the property over to me in lieu of foreclosure. So I end up owning that property.
Okay.
And, I think one of the questions you kind of wanted to, or you asked me ahead of time, and is one of some of the best and worst deals, and that kind of lies into that. So if you'd like, I can go over that situation, because I think that might be educational for some of your listeners.
Yes, please do. That sounds like an interesting story. So let us know what that was like.
Yeah. So basically, I did a private loan to it's a company, and they had a portfolio of properties. I lent $43,000. It's a property in Pennsylvania. It was fine for about 2 years, and then they started having some trouble, probably with the management. They could not manage their portfolio well, so they started paying late, and then they didn't pay for a couple of months. So I got concerned at first because I never dealt with that, but eventually I was able to reach the owner, and we agreed that he's just going to deed the property over to me. Well, this property is appraised at about $75,000. That's its value, and I was getting about $350 a month on that loan, and my rent right now is $675. So and that's the example of the worst case scenario when you're doing a private lending, assuming that you're doing a good due diligence, that the property value is there that you're lending on. So, I had a couple of months of headaches while going through this process, but at the end, I end up benefiting more than I could even imagine, because property is worth significantly more, almost double of what I invested into it, and my cash flow increased. So I'm keeping that property as of right now because it has a good tenant. And now the good thing, that property is inside of my Roth 401k, so all of the gains going to be tax free. But eventually, maybe if tenant moves, my goal is to sell that property and reinvest that into another private loan, because I really like a passive aspect of private lending.
Yeah, so that particular deal, Dmitry, turned in from a potential one of your worst deals into now it's one of maybe your better deals. It's shaping up to be a pretty good investment for you, especially being there in your Roth. So all those capital gains you're going to realize are tax-free. So yeah, awesome stuff. It just goes to show the power of investing through a qualified retirement plan like this. Now, when we're talking about real estate investing, one of the big magical things of real estate investing is the ability to leverage the property with debt or borrow money from a bank or a lender like yourself to buy the property. Now, you don't actually have that option when you're investing through a qualified retirement plan, right? You can't go to the bank and borrow 80% of the property and a 20% down payment through your solo 401k.
Well, it's not exactly accurate because while you cannot get conventional loan, you can just go to any bank and get a conventional loan. And conventional loan meaning that when you personally qualify it and the lender is looking at you, what's your credit worthiness, what's your ability to pay the loan back. You cannot do that with a retirement account because you're a disqualified person, you cannot guarantee the loan. But you can get leverage, and it's called a non-recourse loan. Non-recourse meaning that when you borrow in to buy a property, you personally not responsible for the repayment of the loan. Property itself is the only security for the loan. So it's a little bit more risk for the lender. Therefore, the terms are a little bit different. Typically, these types of loans, they require 30 to 40% down payment. So you got to have a little bit more cash and a slightly higher interest rate. And I can give you an example again on a property in Phoenix that I purchased 5 years ago. Inside of my 401k, I had to come out with 40% down. And I did a 5-1 arm loan because I did not intend to keep the property for very long time. In fact, it's been 5 years this past September, and the loan had adjusted. My initial interest rate was 4.875, which is pretty good for non-recourse loan, and now it adjusted to 6 1/8. So I'm still very good. Probably payment's gone up about $100, but again, my property almost doubled in value, so I'll probably be selling in the next couple of years. So I'm not concerned about this minor adjustment. But again, you could get a fixed loan as well, so that is an option. And so you can use leverage. You need more money, but it's pretty straightforward process. If property qualifies, you can get a loan.
Okay, yeah. So I stand corrected. You can use leverage. It's just in a non-traditional sense, using a non-recourse loan. So you can't go to the bank and get a traditional loan because you would have to secure that personally, and that would disqualify you through the IRS's rules because you would be benefiting the investment, right? So yeah, that makes a lot of sense. Now, in terms of tax advantages of investing in real estate, is there any loss of tax advantages when you're investing in real estate through your solo 401k, or does it operate just like it would outside of the solo 401k?
Well, this is just, again, when you say losing or loss of tax advantages, this is comparing apples to oranges.
Okay.
Because what you're doing is, yes, there are tax benefits when you invest in real estate personally, because all of the income that you receive from the investment is taxable. So what you're using is you're getting some tax advantages to minimize your taxable income on that investment. Well, when you invest inside of a 401k is a qualified retirement vehicle, meaning it is tax deferred. So none of the income that you receive is taxable. Therefore, there is nothing you can't use the depreciation to offset the income because that income is not taxable. So it's just a moot point. Yeah, so again, it's generally speaking, let's say if you have $100,000 or whatever the number is, if you have some cash personally and you have some cash in your 401k and you're looking at a piece of property, single family residence to buy as a rental, I will say go and buy that personally because you're going to get some tax benefits and property will produce some tax deductions for you going forward. If you have that option, the issue is that most people don't have that choice. People have $100,000, $200,000 in their IRA or 401k. They don't have that kind of cash sitting in their savings account.
Sure.
So they don't have that choice. And so the choice that you must make is what will be the best decision for your situation. And again, the options are as follow. You can leave it in a traditional IRA or 401k and invest in the stock market. Again, you have no control over that, and it's a risky proposition. Or you can set up a self-directed IRA, and you can either buy a piece of real estate if you can find a good deal, or you can do private lending, or you can invest in somebody else's deal, the syndication, or maybe invest in a trust deed fund and get 12% return on your money. It's very predictable, very stable, a lot lower risk. So that's the kind of consideration you need to look at. You don't necessarily want to compare that with buying personally. If you have the ability to buy investment property personally, do it. Of course you should do it, because real estate is a great investment, but you want to compare apples to apples and oranges to oranges.
Yeah, right. Okay. That makes a lot of sense, Dmitry, and you've really cleared that up. So yeah, appreciate that. Now, when we're talking about investing personally versus investing in your solo 401k, you actually have the option to do both by being able to borrow from your 401k, right?
Yes, although solo 401k has a loan feature allowing you to take a personal loan up to $50,000, just like a 401k that you have at your employer. It's the same feature. You can borrow up to 50% of the balance. The loan can be used for any reason, although I just want to make sure that if you're considering doing that, you got to be careful and you got to really look at the numbers. You don't just want to borrow money from your 401k and then invest this money. The loan feature really works best for some other needs. I mean, if you really need some cash and maybe it's a family emergency situation, if it's an IRA, the only way you have or option you have is to cash out. When you cash out an IRA prematurely, you're going to have to pay penalties and taxes both on state and federal level. So you may end up losing 40-50% of the amount that you take out. Well, 401k allows you to take a loan. It's a 5-year loan, and then you pay that off without any tax and penalties. No consequences like that. But you don't want to take the money out of the 401k so that you can invest personally, because think of it this way: you're taking the loan from the 401k, which is tax deferred vehicle, and now you personally going to invest, and this investment you're going to have to pay taxes on. So you're going to have to pay the loan with after tax dollars, while you could have invest inside of a tax deferred vehicle, and all of the gains and all of the income from that investment would have been sheltered from taxes. So I mean, some people they get excited about borrowing from the 401k to invest. I don't think that's the best idea. There's better ways to use the money.
Okay, yeah, that makes sense. So you're saying don't pull tax deferred dollars to invest and then pay that back with post-tax dollars. So
yeah, what I'm saying is you don't necessarily want to pull it out to invest. I mean, if you need a loan, you get the loan. You exercise that option. You take the loan if you have some kind of a situation where you need cash. But what I'm saying is, you probably don't want to just borrow the money so that you can invest personally, because you're going to have to pay with that after tax dollars, and the loan payments is probably going to be higher because it's a 5-year loan amortized over 5 years, and you probably can make the numbers work just by personally borrowing somewhere else, even if it's at a higher rate. But if you can invest, for example, I can all day long, I can do a private loan and I can get 12% plus interest on my money. Why would I take a personal loan at about 5 or 6% and not have my money work for me? It just financially doesn't make a lot of sense. But again, every situation is different. You gotta, no one situation is, two people situation is the same. You got to look at your own situation and talk to other people. Talk to experts like myself who can help you think this through and this way you can make the best decision for you, for your particular situation.
Yeah, definitely. So, and you're talking about, making sense of the investment here. Good segue into you and your company, which is Sense Financial Services. And you and your company or your firm there help people set up and invest in their solo 401k accounts, that is. So tell us a little bit about how you help people and what people can expect if they want to come over and learn more about what you do there.
Sure. We actually, we don't invest for people. All we're doing is we're providing the investment vehicle. Let me use this illustration as one of my clients put this, and I think he so eloquently elaborated this.
Okay.
And he said that what we did for him is we put him in the driver's seat of his retirement account. That's what we're going to do. So if you need a vehicle to drive, we're going to build that vehicle for you. We're going to give you the keys. You're going to sit down at the driver's seat and you're going to take off. We're not going to be with you on the driver's seat. We're not going to tell you what to invest in. Again, this is for responsible people who want to take want to educate themselves, want to make their own investment decisions. We're going to be there for you. We're going to help you and guide you when it comes to how to use this vehicle, but we don't offer investment advice. We just provide you with the vehicle. I'm an investor myself, so I'm gladly will talk to my clients and kind of brainstorm and help them maybe with a little bit of wisdom that I have. But ultimately, you want to make your own investment decisions.
Yeah, awesome. Well, Dmitry, it's been fun kind of talking with you about this solo 401k. It's a qualified retirement plan that not many people know of. It's a little bit of an unknown to a lot of people. It was me just a few short months ago. I recently heard about it, started researching it, looked online, and everywhere I looked, your name popped up. So I knew I had to bring you on the show and talk to you about it. So thanks so much for coming on. It's been a lot of fun. Now, as we're wrapping up here, we've got a lightning round. We ask every one of our guests, are you up for it?
Sure.
All right, awesome. Well, the very first question is, what was your biggest hurdle getting started investing in real estate? And then what'd you do to overcome that?
Well, for me, again, it was back in about 2000, 2001, maybe 1999. That's when I first learned about real estate investing. And for me, the difficulties was I had no experience, I had no money. So how I overcame that is, again, just being wise with my money. I was working and had just my regular salary, so I was saving and working on my credit so I can qualify for a loan, and also going and networking, learning about real estate investing by going to some local seminars and talking to other investors. And regardless where you at, at least in the US, you can find some kind of a networking opportunities that you can drive to, or even nowadays you can do it online. You can subscribe to podcasts like this one, and there are many others that you can be in your car and you can listen and you can educate yourself.
Yeah, I love it. Well, Dmitry, do you have a personal habit that contributes to your success?
Well, for me, I think the biggest one is determination. I just looking at my life, I tend to stay focused on my goals. So if I made certain goal or certain decision, I'm going to be diligent to making that happen. I think by doing this, if you apply this, if you learn to be determined, then you can reach your goals, regardless what that is.
Yeah, awesome. Well, Dmitry, do you have an online resource that you find valuable in your day-to-day?
One resource that I find very valuable is BiggerPockets.com. This is an online community for real estate investors, and there's a lot of education there, a lot of forum discussions. I benefited personally a lot from that, met many people who became friends. I think it's a great resource.
Yeah, I would say almost everybody listening to the podcast right now, if I had to guess, has at least heard of BiggerPockets. If doesn't yet have a profile there. But I've got to bring something up here. I checked your profile out on BiggerPockets, Dmitry, and you are one of like 30 or 33 people who have what is a 10,000 post club there. So you are very, very active. I know they have over 1 million members, and you are in the top 33 people in terms of posts there. So really impressive accolade there.
I've been active there for the last about 4 years, maybe. First, when I joined, I was not active, but then I kind of plugged in. So I spend some time daily there. It's how I get a good portion of our business. We have about 500 clients who came from BiggerPockets, which is 25% of our total, about 2,000 clients. I think it's a great community. I think I do provide some value, and that results or shown in the results that we get in. Our phone is ringing, but personally, just as an investor, when I have a question or when I need something, I can go there and I can ask question. I can get a lot of input. So I think it is a great resource.
Yeah, certainly so. It just goes to show how determined you actually really are. So, well, Dmitry, next question. What book would you recommend to the listeners and why?
There are a number of books, and I'm actually not a big reader. I like personally, I like to listen. So it's a lot easier for me to listen. So either audiobooks or podcast, I enjoy that. I think I get a lot more. But one book I can definitely recommend that stood out is Cash Flow Quadrant by Robert Kiyosaki. He also wrote Rich Dad, Poor Dad. And the reason this book is because of the concept, the cash flow. Did you read that?
Yes,
book?
I've read it. Yes.
Yeah. So, there is 4 ways you can make money as an employee, as a self-employed, as an investor, and as a business owner. So I'm happy to report that I am on the right side of the cash flow quadrant. I did not start there. I do have investments that work for me, and I receive passive income, and I build a business system that works for me, and I don't have to be there. So I think it's very important. I'm going to be 45 this coming February, and I reached financial independence because of applying these principles in this book.
Yeah, that's Cash Flow Quadrant by Robert Kiyosaki, author of Rich Dad, Poor Dad. He's written many good books, and that's just one of them. So yeah, we'll definitely link that book in the show notes for audience members to pick up. And like you mentioned, audiobooks. I love listening to audiobooks as well through Audible. And for our members that don't yet have an Audible account, I'll drop a link in the show notes. You can go over there, sign up for Audible, and if you do, you'll get your first book for free so you can make that cash flow quadrant. Well, Dmitry, wrapping up, very last question in the lightning round we've got for you is, if you were to give advice to your 20-year-old self to get started in real estate investing, what would that be?
Well, I started in my 20s, and some of the mistakes that I made I can talk about this much longer, but basically, I think I end up over leveraging, and I end up actually losing some of the properties that I initially started. And I think just looking back, the reason that I was in the situation that I was is probably greed was driving me. And that's the advice that I want to give back to myself. If I was to start, then not to be greedy. You can achieve wealth in real estate, but you don't want to rush into that. It's not a get rich quick. So make sure you just have good goals, and also be careful with leverage, because leverage is a great thing, but if you're over leveraged, which what happened to me, then that can actually come back and bite you.
Yeah, I love it. Well, Dmitry, hey, it's been a lot of fun having you on the show. For the audience members that would like to learn more about you, maybe explore and learn more about this solo 401k, where can they reach you, and where can they learn more about what you're doing?
Well, definitely they can go to our website, sensefinancial.com, and on that site you will find links to all of our social media profiles, Facebook, LinkedIn, as well as BiggerPockets. If you're a BiggerPockets member, I'd love to connect with you there. We do offer a free complimentary consultation to all of your listeners. So if you want to chat about your situation, completely no obligation. I love talking to investors, and if that's something that we can help you, we would love to help you. We only work with those people who need what we have to offer, but we'll be happy to chat with you. So feel free to reach out.
Yeah, sure. Okay, so that's sensefinancial.com. We'll link that website in the show notes for our audience members to go check that out if they're interested in connecting with you and learning more about the solo 401k. Dmitry, as we're wrapping up here, is there any last minute parting piece of advice you'd like to leave with our audience members?
Well, the last kind of reflect on our conversation, tax-free and tax-deferred growth. If you kind of keep that in mind as you invest, as you do your own financial planning, tax-free and tax-deferred growth can really help you advance on your journey to financial independence and financial freedom.
Yeah, I love it. Well, Dmitry, hey, thanks so much for coming on the show today and sharing all this information about the solo 401k. It's been a lot of value and a ton of great content. Look forward to having you back on the show in the future.
Thanks for having me. I really enjoyed the conversation.
Yes, thank you, Dmitry. Take care. All right, well, that wraps up this week's episode with our guest, Dmitry Fomichenko. Dmitry provided a ton of great resources and actionable content around implementing a solo 401k in your own personal financial planning. Well, if you'd like to go over and check out what Dmitry and his team are doing at Sense Financial, you can visit their link in the show notes. And when you do, make sure to mention that you heard about them on this podcast for a 10% discount on all of their services. For more information, resources, and to connect with me, you can visit www.jacobayers.com. Till next week, engineer the lifestyle you want.
You've been listening to the Real Estate Way to Wealth and Freedom podcast, providing you actionable content to build your real estate empire. Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for personal advice. The opinions of guests are their own. Information is not guaranteed. All investment strategies have a potential for profit or loss. The host is operating on behalf of the Real Estate Way to Wealth and Freedom, LLC, exclusively.